Imagine this, the next trillion-pound revolution isn't oil or property, it's software, algorithms, and artificial intelligence, sweeping through every industry. And guess what? You don't need to be Elon Musk or a tech-savvy billionaire to ride this wave. This video will unpack how, yes, you can invest in AI from right here in the UK, in smart, tax-efficient, and diversified ways that match your risk appetite. Keep watching because I'll reveal how to invest in AI through ETFs, stocks, specialist trusts, and even private opportunities, all with the unique UK advantage like ISAs, SIPPs, and venture capital trusts. So let's get started. So the UK isn't just sitting on the AI sidelines. As of 2025, the UK AI market is valued at over £21 billion and is projected to surpass £1 trillion by 2035. Making it the world's third largest AI market alongside global leaders like the US and China. Meanwhile, Europe is now the biggest global market for AI-related investment funds, with European AI fund assets totaling $22.7 billion as of May 2025, most of which is still invested in US tech giants like Nvidia, Microsoft, Alphabet, Meta, and Amazon. So what's the bottom line? UK investors have a unique vantage point, local opportunities, and global exposure, all wrapped in solid regulation and tax perks. So how can you invest via ETFs? ETFs, or exchange traded funds, offer diversified exposure, which is ideal for tech themes like AI, where picking one winner is risky. Here's the top AI ETFs available to UK investors. You have the Global X Artificial Intelligence ETF. You also have the Global X Robotics and Artificial Intelligence ETF, Legal and General Artificial Intelligence ETF, which tracks the Robo Global AI Index. You have the ARK Artificial Intelligence and Robotics ETF. You have the Wisdom Tree Artificial Intelligence ETF, and you have the iShares AI Infrastructure ETF. Platforms like InvestEngine highlight these top picks for UK investors, with benefits like low cost access, ISA or SIPP compatibility, and minimum entry amounts as low as £1. So what's the most traded ETFs on UK platforms? According to Tajiro, the most traded AI ETFs in 2024 were Xtrackers Artificial Intelligence and Big Data ETF, Legal and General Artificial Intelligence ETF, Wisdom Tree Artificial Intelligence ETF, Global X Robotics and AI ETF, and the Amundi Robotics and AI Screened ETF. Here's why ETFs are a good starting point. Built-in diversification reduces single stock risk. Many are also accessible via ISAs or SIPPs, so your gains stay tax efficient. Also, themes like AI can pivot quickly. ETFs reduce the need to time the market. But watch out, they often tilt heavily towards the Magnificent Seven, which are the US tech giants. So some like iShares AI Adopters and Applications ETF offer lower US concentration, around 8%, for a more balanced exposure. If you prefer a more hands-on approach, you can pick individual stocks directly. Here's some companies to watch which are frequently included in AI-themed funds. You have Nvidia, Microsoft, Alphabet, Meta, Amazon, the usual heavyweight names. Other common holdings include Broadcom, ServiceNow, Oracle, AMD, Salesforce, and Marvel. If you want UK-specific exposure angle, fund manager Nick Train, for instance, has shifted his holdings towards data and software players like RELX, London Stock Exchange Group, and Experian, all leveraging AI and analytics. Let's talk the pros and cons. Starting with the pros, you have the potential for high returns, especially if you pick undervalued AI disruptors. But here's the cons. It is very high risk. AI markets are volatile, and Magnificent Seven dominance means limited diversification unless you're careful. Let's talk the tax efficiency. Firstly, you have the stocks and shares, ISAs, and SIPPs. You can invest via these and your gains are tax-free. Both income and capital gains can grow shielded. You also have venture capital trusts, or VCTs. These vehicles invest in unquoted early-stage companies. Some are tech or AI-focused specialist VCTs. They offer aggressive tax reliefs, 30% income tax relief, tax-free dividends, and no capital gains tax on disposal, but they come with much higher risk. In terms of the practical application, use your ISA for ETFs and big cap stocks. Pay into a SIPP if you're future focused, essentially the same tax benefits. Also reserve a small portion, maybe 5 to 10% of venture capital trusts. If you are risk tolerant and want direct exposure to the next wave of UK AI startups. In terms of diversification and risk management, AI investing isn't just about chasing shiny algorithm beachheads. It's about blending strategies to manage risk. So here's your key considerations. Firstly, diversify across instruments. Combine ETFs with individual stocks or VCT exposure. Second, stay aware of volatility. AI funds can be more volatile than broader markets. Thirdly, avoid sector bias. Vanguard warns against overweighting tech. No matter how hot it is, it can backfire. Include some broader equities to stay balanced. Fourth, use cost-effective platforms. Look for low-fee brokers and take advantage of commission-free trades. So Invest Engine, for example, offers that for ETFs or Trading 212. Fifth, prepare for downturns. Fidelity advises setting stop losses, diversifying, and staying patient when the hype may fade. So here's your step-by-step action plan. Firstly, define your goals. Are you investing 3, 5, or 10 years out? Know your risk tolerance. Second, open your toolset. Set up a stocks and shares ISA. Consider adding a SIPP, especially if you aim for longer horizons. Optionally, you can explore the VCTs if you're eligible and comfortable with higher risk. Thirdly, allocate your funds. So you could go with, say, 50% in a diversified AI ETF, 20% in select individual stocks, so Nvidia, Broadcom, etc. You could also do 20% in broader equities for balance. And finally, put 10% in a specialist VCT or private tech funds for that high speculative return. Fourth, review and rebalance annually or semi-annually. And fifth, stay informed by following AI developments, fund strategies, and regulatory shifts. To wrap up, investing in AI from the UK is no pipe dream. It's a dynamic opportunity rooted in real markets and tax advantages. ETFs offer a smart base layer. Picking individual stocks lets you go deeper. ISAs and SIPPs shelter your gains, and VCTs let you bet early if you dare. The UK isn't just watching the AI wave, it's building the surfboards. Stay diversified, disciplined, and data-driven. If you found this useful, hit like, subscribe, and let me know which AI investment avenue you'd like to explore next. See you in the next one.